Welcome to the Travelex Weekly Outlook. The dollar made its August debut by falling broadly. That's as positive data from around the globe really bolstered confidence in the direction of the global economy. And when investors feel more confident about the direction of the global economy, they tend to venture away from safe havens such as the dollar. So as a result, right now we have seen the dollar start the week at a 3-month low against the euro and also a basket of major currencies. And against the British pound, the dollar's at a 6-month low. Last week, though, we did see the dollar underperform really across the board. The dollar sentiment was really undone by some discouraging data. That has suggested that the U.S. economy is likely to spend the second half of the year in the slow lane. Among the reports that came out last week, we saw that consumer confidence dipped to a 5-month low in July. We also saw that weekly unemployment claims, those held near stubbornly high levels, while U.S. growth for the second quarter came in a touch softer than expected. So together, all that data really adds to evidence that the economy is going to slow in the months ahead, and that reinforces the Fed's low-rate outlook. And of course, that tends to tarnish the dollar's yield appeal. By contrast, recent data out of the Eurozone has largely defied expectations by coming in above expectations. Eurozone figures have really the upbeat data has really helped the euro to rebound off a 4-year low that it hit against the dollar 2 months ago. And really that diverging outlook for U.S. data versus its European counterparts has been the key factor in the euro's outperformance during the month of July. In fact, in July, we did see that the euro finally snapped a 7-month losing streak against the U.S. currency. The euro did gain about 6.5% on the month. Although the euro's uptrend might have further room to run, its longer-term prospects are still clouded by expectations that growth will likely be a casualty of the government's cost-cutting measures to trim some of those hefty deficits in the region. So as a result, budget cuts and some of the tax hikes, those are really seen as putting pressure on consumer spending, and that could weigh on the single currency in the months ahead. The first week of August will be an eventful one. In typical fashion, we have the first Friday of the month. That brings the U.S. unemployment report. That is expected to show a loss of 75,000 jobs during the month of July. The week of August 2nd also features key data on the manufacturing and services sector. And we'll also get personal income and spending figures. The week ahead also includes key central bank meetings. We'll get meetings from Australia, the Eurozone, and Britain, although all the central banks mentioned there are expected to keep rates unchanged. That is all we have for this week. For the latest on the dollar, please check us out online.